Welcome to Momentum Monday. Today is Sunday, September 29th.
What's going on? Did you have a good week?
I had a good week. I just took a nap and I'm doing the show with you.
You're 30 years old, Shanling. What's going on?
I was tired.
All right, good week. It's Oktoberfest. Bad week, markets.
Yeah, last week we talked about the seasonality and how the week after the quadruple option expiration in September has been the weakest week in the past 30 years. And on Fridays, the stock, it seems, wanted to rally a little bit in the morning. And then that news about the US wanting to stop capital flows to Chinese stocks just led to a big sell.
Take a look at this crazy. I'm not going to follow the news because he'll say anything, do anything to see what the markets do. It's really, really bad behavior coming out of.
Let's take a look at Alibaba, which was it was trying to break out and actually broke out from a decent base.
Yeah, but look at that volume now, overwhelming.
And then it reversed.
Kind of action. You can't touch these Chinese stocks. Cannot.
It's not just the Chinese stocks.
I understand, but this is like after Friday, I wouldn't go near them anymore.
I agree.
You can't.
What happened?
The White House could care less about China. And I tell you what, I have a thesis after reading about 4 or 5 really interesting posts that he's going to stop. He's so cornered he may stop caring about the U.S. market at this point. He's going to protect this release of this transcript from the phone call. Has the White House just doing stupid things this week, for the market. I don't really care about impeachment, non-impeachment when it comes to my money. But if you look at the price action since the tape came out, or since the transcript came out, let's go to the S&P. And I think more important than NASDAQ 100, Ivan, I moved this. Because I think you've got the big caps kind of hiding the real damage, right? Because if you look at Apple, Google, even Amazon, they've kind of held in a lot better than the smaller cap tech stocks. So Amazon now breaking down. If we look at the software companies like Okta, but let's now go to the ones that were really beaten up. MongoDB. These things are getting annihilated.
All the enterprise software stocks.
I'm saying so these were the ones that were during the trade war, seemed to be ignoring the trade war, right? And now we see there's no hiding out from a trade war or a crazy White House, And I think we saw some real runs to the exits. There's notice and no bounces. Look at Roku, how strong that was. And it's just given up big tough for momentum people. There's just been no way to get out of these.
The same with Shopify.
This is my favorite. Still a 98 relative strength, even though it's fallen almost 30%.
Mm-hmm.
So you can see how extended these were. And they're in no man's land. I wouldn't touch Shopify till it was in the mid 200s, buying back stock that I sold on the way up. So I don't know. I feel like we're in no man's land. And I think there you go on a longer. If you go to the weekly on Shopify, 200 days, still about 40 points away, 50 points away.
About 260. Yeah.
Oh, 260. Yeah. So right in there, if the market was correcting, that would probably be on my list for a bounce. So we're still, 5 to 10% away.
And there were quite a few stocks that tried to bounce near the 200-day, and as you can see,
that's weak. Right. Those should bounce. First time at the 200-day, those should bounce.
Yeah, a little bit, but that was kind of dead cat bounce here for the trade desk.
Yeah,
lower.
That's a market leader. Those are supposed to bounce.
Yeah. I mean, it
If
seems.
we look at Okta, that was a leader, no bounce.
None of them have really bounced.
See that right at the 200-day bounce for an hour, and they're a day, and then gone. If we look at AYX, which was another leader software. Okay, now it's so like Shopify. These had such good runs; they're not quite at the 200. So I think you got to look at Shopify and AYX as two of the strongest stocks of the year. Pull this up. If we can go to Fred Wilson, he had a great post about what is a software company now, and I think there's been a lot of arguing on the web about what is, a tech company, because with WeWork not working and Peloton's IPO down on the first day, I think Fred at abc.com has a great post, the synopsis being basically, if you don't have 75% gross margins, we can go back to your stuff, Ivan, but if you don't have 75% gross margins, you got to be really careful about what you think you own as a tech stock. And you can see here, Uber 46% growth margin, Lyft 39, Peloton 42. So the stocks I'm looking at, if you really want to own software, you've got to be in the right stock. So Zoom, he mentions 81, Cloudflare, which just went public, 77% gross margin. And these are too early to trade, but I'd love to see Zoom in the 60s. And then Cloudflare's kind of given back all its post-IPO gains already. So week. If we look at the IPO index, Ivan, IPO, probably rolling. Oof, Ivan, that's brutal. So that index gets down there around 25. That'd be interesting. So we're setting up at somewhere for a great bounce. But seasonality, everything. But again, I don't know. I'm not good enough to see this. Where are you seeing stuff, Ivan?
Well, what I'm seeing is that up until a few weeks ago, it seems the market didn't care about valuation, and now all of a sudden it does. Mm-hmm. And it's not about margins as of right now. It's about still high valuation, and even after the 30-40% decline we saw in many of those software stocks, mm-hmm. Their valuation is still very steep. And if this is still the major thesis in the market, that high valuation stocks need to come down, then we might see further drops. And of course, you see some bounces along the way, but right now many of them are kind of in a downtrend. I mean, that's depending on your time frame.
We're different. I'm just kind of 50% cash and waiting for lower prices. You're actually you're putting bets on the short side.
Yeah, absolutely. I mean, I have to do what I need to do to make money, and I adapt to the changing markets. One interesting thing I recently noticed. So on Oktoberfest, one of the guys mentioned a website called Empire Flippers, where you can actually buy a web-based business that basically runs itself, or it takes 5 to 10 hours, to run it. And I took a look at the valuation at which those companies are getting sold, and they were like 26 to 32 times this year earnings, which
small businesses that are being bought by regular people.
Yes. Web-based, let's say you sell, pens on Amazon, and you automated everything. You can actually go and sell that business at 30 times your annual earnings.
What are you doing working with me then? Why aren't you rich? You should be selling Bulgarian potato sack pans.
Well, it's not that easy, but I'll look into it. So, but what I meant to say is that all those businesses, which we don't even know if they'll exist next year, they are selling at 30 times earnings, while the S&P 500, which is, it's a lot more liquid, is selling for about 16 times next year earnings. So there is some big disconnect between what's going on in still
Well,
in.
and we're seeing that, Ivan. What's leading banks? So if we were to look at the stuff that doesn't interest me, and I've been wrong, right? Utilities have been a great investment. I should have one in my 8 to, I should have the list in my 8 to 80 list at this point. But utilities, REITs, and banks are leading, right? It doesn't get me excited, but
yes, they're reading us. They're doing a little bit better than the rest, just because most institutions, by definition, cannot go to cash, so they need to hide somewhere. So where they have
no reason to go to cash, right? Like the S&P is yielding more than cash. The S&P, so you might as well hide out. So this is interesting. Money's not coming out of the market; it's rotating into other.
Rotate. So of course, when you think that you can, there is a good probability that the market will drop. You hide into the defensive stock, so you lose less.
I think that's why this bull market has gone on so long, right? If you really think about it, and again, this is hard because behaviorally, I've never seen a bull market kind of go on this long, especially around momentum stocks. But as the momentum comes out of the market, the money's just flowing into other assets, other stock sectors, and it kind of makes sense with the S&P only trading at what you said, 16 times next year's earnings.
Yeah. So historically, that's about average. I'm just still surprised that it's still relatively cheap to compare to other places that are not liquid where you can invest your money. But let's go back to what's going on right now in the market. And what I continue to see in the past few weeks is a ton of failed breakouts.
Yeah.
Any single stock that was considered a high flyer, high momentum stock had a failed breakout or just broke down hard in the past few weeks.
But a few examples. Give a few examples.
I mean, okay.
I saw Amgen that failed breakout.
Yeah, I mean, last week we talked about Carvana. They had great earnings, rallied for a couple of days, and now they're coming down.
Okay.
Amgen,
yeah.
Last week we had another one. Look at this one. They tried to recover above their 50-day. It looked like they were breaking out, and then they were just smashed.
What about the team? Has that gotten killed like the rest of them?
Team,
yeah.
Yeah, he's something really well. As you can see, after they broke below their 50-day, they rallied, and now the 50-day has become a resistance. And this is
those are not great rallies either.
I know, but that's bear market behavior.
No. Where's Salesforce?
Salesforce, similar.
Yeah.
And here's Palo Alto. Decent earnings report is just starting to break down.
PANW looks terrible. Where's Workday?
Work?
WDAY, I believe.
Work.
Eva. Oh my goodness. Look at that one. That was like, so WK. No, but look at, oh God. I tried that trade. That was not a good trade.
You just type some random symbols and you probably get about the same result.
No, but where's WK was like a serious leader. And it's just.
Yeah, it worked. And now that's kind of bear flag. I mean, they lose that level.
We're covering these for months and they're just kind of giving up.
Look at these guys now. I mean, they're testing their 50-day. I think if they lose that level here, which is very important, about 245, they can easily drop to 230. And it's not just tech. Also, major companies like Starbucks is kind of breaking down. And as we know, most of Starbucks growth came from China in the past few years. So if China retaliate and say that maybe U.S. companies are not allowed to invest,
we're not headed down a good path. Again, this can all change, but I mean,
it can change with a tweet.
It cannot anymore. No, I think this is where you're wrong. We're getting past the point. We can have a rally off a tweet, but I think we're really in jeopardy of losing the.
I still believe that the stock market is really important to Trump, and he'll do anything, including cutting taxes, to see it go higher, because he knows that if
you're missing a point, Ivan. That changed last week. Now he's back in lawyer mode and worried about impeachment. So there's a difference. He wasn't worried about impeachment when he was worried about the stock market. He cares about himself. So I think what changed this week, why you didn't see a bounce, and this is not important to you because you're taking short trades. So kudos to you. You don't really give a shit. I give a shit. And you really don't, because you're not supposed to worry about the tweets. I give a shit because, you know, he's in, when he's in save the hive mode, he can't worry about the market. And so I really feel things changed a little bit last week. But I hope I'm wrong. But it's not going to go away. The Dems have some momentum, and the markets do not like the Dems. Already, everybody's out, speculating that if Elizabeth Warren gets into the market, silliness that the world's going to come to an end. Right? They're giving presidents too much credit and too much, it's silly. So I think what the markets, for you, it doesn't matter. You're taking setups on both sides. For me, it's just like high cash, be careful. I mean, even MasterCard last week, Ivan, just reversed.
Yeah, for most people it should matter, because most people are not active in the stock market. They rely on the stock market to retire.
Yeah.
And I think, that's
on the defensive here. You have, if that's what I'm trying to help people with. We've had great runs. People should have been selling for the last few months. We were talking about this going into the summer. Gains have been fantastic. There was times to take gains, and we can see these. I was selling some MasterCard and Visa all year, and you can see these things could really tumble if they get a little weaker. I took my profits in PayPal, like 107, 108. Where's that at?
It was absolutely demolished. As you can see, if they look at level here, it's just
very heavy, very heavy.
So do you want to hear another interesting theory I have real quick?
Go ahead.
So I'm thinking that if by any chance we experience like a big decline in the stock market, that might actually revive an appetite for other asset classes that are related to cryptocurrencies and tokens.
So what's that?
It could be anything. It could be just being able to invest in a movie via just tokenize a movie or anything, basically. I think that if we see a big correction in the stock market, all of a sudden people will start looking for.
Well, if we see a big correction, the S&P is still up 18% on the year, Ivan, so we'd have to have if we correct another 10, 15%.
Another big decline. I'm talking about 50% decline. If it ever happens, that will unlock interests in other areas. It's not just going to be everything all about the stock market. So another thing that made an impression on me last week was the price action in gold. It tried to rally and then it was slammed pretty hard, kind of. Which
everything last week, Ivan.
It seems the market is not worrying about inflation anymore. It's more about recession again. If gold is acting this way.
Price action on the indexes really masked carnage last week. If there wasn't for that late day little bit of a rally in where some of these software stocks bounced, it was ugly. And if Apple caves here again like it did last fall, we could see some real index damage. But
I went to Fashion Valley Mall today, and I saw such a long line in front of the Apple store. I was like, what's going on here? What are they selling? Like, people are lining up. Like, all the other stores are empty, just Lululemon and Apple.
Lululemon, I'm so bold, and Nike. So if we look at my Fashology trio, that's really held me up this year. Apple, Nike, Lulu have just been, and again, it goes to what Fred was saying. Apple doesn't have the highest margins, but for these three businesses, the three businesses that these guys run, fashion and technology, I call it Fashology, with the 40 to 60% gross margin, normally these stocks should be caving, but because they are just in such high demand and doing so well despite only having 40, 50% margins, gross margins, phenomenal. So the Fashology trend has probably held up the best. Yeah, there's Nike, all-time highs.
Yeah, at leisure, definitely. Those companies that are in that trend, they're the only one that are actually selling. So, yeah.
I wouldn't buy it. Nike is the one that I probably buy if the market firms up, because they've just Nike.
Exactly. They just get one of their best earnings reports in a while. But look what's going on in biotech, which is kind of indicator for.
That is 25% rev
for risk.
Did we lose internet?
No, but it says it's unstable, so maybe we should.
Unstable like the market. It's unstable like the market. Okay, so risk is off. We've got China, we've got biotech. So let's just sum. We got China, biotech, risk off. Crypto, crashing there. Of areas of the market risk off. Procter and Gamble, J.P. Morgan, strength. Right. Wow. So the markets do not look like they'll completely cave. And I remember writing about it in 2018 when everybody said Procter and Gamble was dead, death by 1,000 cuts because of Instagram brands, and that was the dead bottom right there. I definitely don't like Procter and Gamble up here, but that was a great trade for those people that took it. But with J.P. Morgan, Procter and Gamble, Apple, Google, all holding in there, Nike, I don't think we're crashing from here.
Yeah, there's still places to hide. I mean, you're not going to make a lot of money in them, but I guess you're not going to lose either. So
interest rates still kind of rule the day on asset allocation, and but I don't think we have an impetus for a great rally here quite yet because of China and because of the weakness in the biotechs. A lot of the speculative stuff is really heavy. So I think caution is warranted. Is there anything that just looks good, Ivan, or we should just check in next week and play it cautious?
There's still some setups that look good, but honestly, in the past 3 weeks, 90% of the long setups they took failed. They had to take a small loss on them. Very few of them worked. Like I made all of my money on the short side.
So there's a couple of setups on the short side that you're looking at.
I mean, as I mentioned already, now if they lose 245, I think they're going quickly to 230.
Okay.
Another one that we should be, if it seems to be finding resistance in its 50 day.
They're coming for all the hot stocks. That was the hottest stock of the year. Now it looks terrible. Okay.
Yeah. And yeah, I mean, there are so many of them. There's so many bear flags right now in the market. And as I said, there's still some okay looking long setups, but so many of them have failed that I don't really want to take them anymore until maybe if I take them, I'll take them with a quarter size until I see them start working.
Yeah, if you don't have to do anything, I think we can check back in next week. This is a week where, unless we have a real kind of panic, and where's the VIX? It doesn't feel panicky at all.
It's not that high actually. Let's see.
Yeah, I'm saying it's like nothing. Really surprising.
Up. Let's see what happens.
I really got to feel like there are some short plays that people can make here if they really, because the VIX is low. There's probably some premium that you can get. So, all right, well, follow Ivan this week. I'm headed to Europe, Ivan. Where?
Oh, good for you.
And but we'll do a show from Tuscany next week. But thanks for doing this. And I think the person to follow this week is Ivan, because you're probably going to have a bunch of setups that.
We'll see. We'll see what the market offers. Okay, let's stop.